Traditionally, the process of collecting bank statements for source of funds has been manual and pretty time consuming. And of course, fraudulent bank statements are too easy to make. However, it needs to be done. The SRA recently published their annual AML report, and they listed failures to check source of funds as one of their top 3 areas for investigation. At Amicus, we've tackled these challenges through the introduction of our banking info check, which some of you may have used before. It utilizes open banking to help you securely and easily verify the balances and transactions of your clients. But despite being around for 7 years or so, open banking feels like it's still pretty new. And a lack of knowledge across the industry has led to a misunderstanding about how it works and how secure it really is. The real question is, if you were asked by your client to explain how safe it is and how it works, could you feel confident in answering them? If not, you're in the right place. Today, we're going to dive into not only what open banking is and where it came from and how it works, but also to address some common challenges and best practices across the industry with a fireside chat with Bob Clark, and then leave some time, of course, for a bit of Q&A at the end as well. At the end of the webinar, I'll also introduce you to a special offer for all of our existing clients to help you take advantage of a free trial that we're doing with our banking info check over the next few weeks. So a bit more of that later. First, what is open banking and where did it come from? In 2016, the CMA published a report on the UK's banking market. They found that established banks just didn't have to compete hard enough to gain and retain customers' business. And smaller banks were finding it difficult to grow, leading to a bit of an unfair share of the market. People weren't switching banks because it wasn't easy. They were paying too much on overdrafts. They had money sat in accounts not earning any interest, and so on. So, as part of this initiative, the UK's largest retail banks were ordered to open up customer data through open banking, allowing consumers to securely share their transaction data with trusted third parties, ultimately to improve financial decision making and control over your data. Open banking allows you to securely share certain financial information that normally only you and your bank can see, such as your balance and transaction history. With open banking, you can give and revoke consent for your data to be used at any time, and you can choose what data can be accessed and by who. Although you may not realize it, you and your clients have likely already used open banking in one way or another, such as when making payments, applying for a loan, connecting to like a budgeting app to manage your personal finance, or aggregating investment portfolios. So if you've ever used PayPal, Apple or Google Pay, Experian maybe to aggregate your different accounts, then you've used open banking before. There was a survey of UK consumers that found that 1 in 2 people are unknowingly using open banking during checkout in a retail environment. And then, despite that, 51% of the population are still unfamiliar with the term. So, how do Amicus use it? We use open banking technology as part of our banking information check to verify source of funds. So, how it works is we ask for your client's consent to access their information, which, once granted, will send a request off to their bank, who will allow us read-only access to their transactions and balances. You could think of it as like a digital bank statement, one that you know is legitimate, it's up to date, and it's going to cover the time period that you requested, whether that's 3 or 6 months. They can choose what accounts they want to share, and they can also withdraw their permission at any time. You can't access any information without their consent, and nobody involved will ever be able to see their digital banking login details. Amicus offer the ability to verify the source of funds via added filtering within this digital bank statement, meaning that you can filter to see only the information that matters to the investigation and not irrelevant details such as every Amazon purchase made over the last 6 months. For me, there would be many. For example, maybe you just want to see their income, payments over £1,000, large transfers in or out. The idea is to save you huge amounts of time in doing this manually on a paper-based statement. If you think about the time it takes to gather that information, whether you're waiting for your client to bring it in, and also the time it takes to review, and of course, not to mention when you're doing it via open banking, it can't be forged. However, of course, we do offer a built-in fallback option to cater for everybody. Not everyone is going to be totally comfortable with new technology straight away. And also, not every bank in the UK has the capability to offer open banking. So once you send out that banking info check from Amicus, if the client is unwilling or unable to link their bank, they would just be prompted instead to upload a bank statement. So they're not going to reach any kind of digital dead end as such. Now, I've talked a lot in the last 5 minutes, and you'll be glad to know that we are going to hear a little bit now from Bob Clark. So Bob joined Amicus as a client earlier this year at Gillespie MacAndrew and has been an avid user of our banking info check since then. A few of you may recognise him from his time as an AML risk manager at the Law Society of Scotland too. So Bob, if you'd like to take it away, maybe you can talk to us a little bit about how Gillespie MacAndrew use Amicus in our banking info check.
Absolutely, thank you, Kat. So yeah, as Kat says there, I am Deputy Money Laundering Reporting Officer at Gillespie MacAndrew, and Gillespie MacAndrew are a rather recent client of Amicus, although we are now avid users of it and very much advocates for it. Prior to that, obviously, as Kat mentioned there as well, I was previously an AML risk manager at the Law Society of Scotland on the regulator side. So I have the ability and the luxury of having seen Amicus from both sides of the fence per se. So firstly, I just want to talk about how we use Amicus and open banking at Gillespie MacAndrew. We have a centralised team at Gillespie MacAndrew for AML and onboarding, which is ultimately headed up by myself as Deputy Money Laundering Reporting Officer. What we do as our main responsibility is to help our fee earners gather in and review CDD information, and that's in terms of not only the ID&V, identification and verification checks, but also the source of funds, source of wealth where applicable, and any other additional client due diligence documentation that may assist us in obtaining a relevant risk assessment for our clients. So within that centralised team, we are responsible for issuing the Amicus requests, and we do this based on the basic and general information that's provided to us by the fee earners. And we have specifically designed templates using the Amicus function that allows us to determine what type of information we may need based on the initial risk assessment, and what type of information the client needs to provide us via Amicus, either through the open banking or, as Kat said, using the non-digital dead end to provide physical documentation. And we find this extremely helpful. So at the moment, we have templates set up for, say, potentially lower or medium risk information, where we include the open banking checks where applicable, and we asked for the clients for potentially 3 to 6 months. And then those that are higher risk, we might ask for potentially 6 to 12 months. So we send out those, and one of the real benefits, which I'm going to come on to, versus using Amicus and specifically the open banking function, versus traditional gathering of documentation, all physical, is that when we send out an Amicus request, that may just be for identification and verification historically, using the electronic suppliers to gather that and verify client's identity. But at the moment, using the open banking, we can gather in so much more detail and information, and that includes the open banking source of funds, source of wealth checks. So it all happens at the one time. And I'm going to just touch on, I've wrote down some benefits, but I think Kat's covered some of them. But the documentation specifically relating to open banking, it comes directly from the source. So where the bank has the ability to provide that information and the client gives you the authority to do so, it's very difficult or near on impossible, I would imagine, for the client to forge that or fake it. So you're getting real-time information and real-time detail on the client's balances, the accounts that they may want to use in terms of a purchase or providing you funds. And you're able to filter through those, as Kat said, and look for specific transactions that are pertinent to your inspection or your investigation, and understand really what it is you need from the client, as opposed to looking through physical statements. Obviously, as I've mentioned, there's a time frame that you can set, so you can see a specific time period dependent on how you do that. As I say, we do it on risk-based approach at the moment, so maybe lower risk, we only need to see a little further back. But if it's higher risk, we want to see maybe a fuller picture over a year. But you can set that time period when you issue your statement, and that then makes sure that the client provides that statement to you. So again, versus a traditional method where you might ask a client for 12 months of statements, but when they bring them to you physical copies, they only have 11 months, or they have sort of a duplicate copy of 1 month. We see that quite often. So it clears that up. There's no ambiguity of what you're asking for and what you'll get back. It's easily accessible and it's recorded and documented all within your Amiqus portal. So something that we liked on the regulator side, where I worked for the ML risk manager at Law Society, is that if it's all contained with Amiqus, we know where it is. We don't have to look for different files held, scanned copies, poorly scanned copies, where the information is cut off or faded. It's all held within Amiqus, and then Amiqus obviously has an audit report function that you can allow sort of read-only access into. So that's really good as well. We really like that as well. Another thing is Amiqus also offers the automatic chasers. So it takes a lot of that responsibility from not only the people in my team and the fee earners that previously had to chase for information. Once you send your Amiqus report, whether that be just simply for ID&V or you're asking for more, such as open banking information, there's automatic chasers every 2 days, up to 10 days. Cat's nodding along. I'm not forgetting the time frames there. And that takes away any stress or worry from our team and gives us a lot more time to focus on actually inspecting information that we're needing, as opposed to, we've got information back at this point, but it's not quite enough, or we want to challenge on the information, or we have to spend a lot of time reviewing it physically. So the chasers are really good as well. The alternative, I want to go on to the alternative, and Kat's again touched on this. There's obviously an alternative built in within Amiqus, which is really helpful in situations where the client perhaps doesn't feel comfortable using the open banking, or perhaps their bank provider doesn't allow them to. Amiqus obviously has that built-in function where they can still provide physical documentation and upload it directly into the system. And that comes again with many of the same benefits I've just mentioned, and certainly in the fact that it records it there in the one place. However, I do always tell the fee earners in our firm and the team members of my team that despite the reliance on technology, there's always going to be a reason why someone may not wish to or is incapable of using the Amiqus. So there's always a place for that physical documentation. However, the benefits of using it and moving with the times per se are certainly there to be challenged. So lastly, just sort of talking about what the regulators like, as I say, we like to see that it's all in one place. It's documented, recorded. I think you'll have heard, if you've ever heard me speak before, or any of my ex-colleagues from the Law Society, there's a sort of mantra of if it's not written down, it didn't happen. And I think, as I said, Amiqus really takes that away from there. The need to do that. You don't have to record where you've investigated statements. It's all held on Amiqus. You don't have to record when you've chased the client. It's all held on Amiqus. It's really good. So on the regulator side, when we used to see Amiqus, it was a real positive for us because we knew that documentation would be easily accessible, easily understood, and we would be able to look through the statements quite easily, and that's a real benefit. One thing I also wanted to mention was, we talk about people that perhaps are a bit unsure of how to use Amiqus, or perhaps more pertinently, unable or unwilling to use the open banking because they're not sure of it. As Kat mentioned, 1 in 2 people are willingly using open banking in some way or form, but then 50% of the population perhaps don't know what it is. So that's always going to be the case. And I think what we've done is we've taken a lot of the good guides and information that Amiqus provides to us, and we've shared those within our firm. We've shared them wide. There are obviously client-facing ones as well, which you can issue. You can add those to your templates as well when you send them, and that's a real positive. That sort of educates. But we've also took those guides and information and sort of made them into our own language and copied those into our own procedures so that we can refer and point to those when we're using them internally. And it's funny because I was thinking of an example that I was speaking to Kat about, where we had a client recently who was a bit unwilling to use Amiqus and a bit scared of the open banking. And they were a bit of a challenging client in any case, and I think this really sort of tipped them over the edge. There was their understanding was that we weren't going to, go down the traditional route, which is certainly not the case, as I mentioned. But they're sort of challenging client, and they decided that based on the fact that we were going to use Amicus and requesting to use open banking, they thought, well, we're just not comfortable. We're not going to use you as a firm. And I know from speaking to a friend or a colleague at another firm that client ended up ultimately going down the road effectively to the next shop. And the first thing that firm did was issue that client with an amicus. So it's certainly something that's becoming more and more commonplace in the legal industry. It's becoming more and more commonplace in our working lives, in our personal lives as well, as Kat mentioned, using things like Apple Pay, Google Pay, PayPal, and things like that. So I think the key here is really to get a good understanding of what open banking is, champion it, and champion the way Amicus uses it to your benefit. And that's pretty much from me just now, Kat. I think you might have some follow-up questions or maybe open to the panel.
Yeah, it's interesting that you mentioned that story about that client because, as we said, a lot of people are still quite unfamiliar with open
Mm-hmm.
banking. My mum, for example, I was renting a property a couple of years ago, and this rental company lettings agents insisted that everybody had to have a guarantor. So of course I chose my mum, and they sent her out an open banking check very similar to the one that Amicus use, where obviously they're asking her to log in with
Mm-hmm.
her digital banking login information to prove that she could cover my rent if I couldn't. And she did freak out a little bit. My mum is not, it's not that she's not tech savvy, but she's really suspicious of technology.
Yeah.
She thought once she put in her login information, that was it. She was going to log in the next day and all her money was going to be gone or something like that. So I think the important thing here is that, we know that it's safe, but it's being able to handle those questions from your client and explain actually what is it. Don't just, we're not just sending them out the request. We can tell them what this request is built of, why open banking is safe, what kind of information we're after, and importantly, what you're not going to be able to do, which is
Yeah.
obviously take their money. Um,
Absolutely. I think that's where the guides come in. As I say, Kat, we've used the guides that Amicus provided. There's obviously client facing and the firm internal ones. We've used them on numerous occasions, and we've actually incorporated a lot of that into our own procedure guides, etc. I think it's funny on that question or example rather of your mum, and we see a lot of that. I think the key for us is when we're talking about what open banking is and is not. You mentioned it in your opening statement. It gives you a snapshot, a live snapshot of the account. It doesn't give you control of the account or access to the account. Anything that we see on the firm side is provided by the customer. They consent to showing a sort of a date range or a period, and nothing else.
yeah,
You can't, the example again with your mum, you can't empty the account. They're not going to log in the next again day, and you can't act on the account. You're simply seeing, as you mentioned, maybe like a digital statement. So I think that's really key to get across, and it sort of maybe alleviates some of those fears. It's quite funny as well. You just reminded me of a story there as well. My own father is he was a career banker. And up until very recently, he's now retired, but even until very recently, he was averse to using even internet banking for himself. So he still very much goes to the branch. And we all know that a lot of branches are sort of physical branches are closing down or they're minimising their space and things like that. So he's only just come around to that just now. And this is a guy that, he worked all his life in the banking industry. And I think I constantly sort of say, how can you not understand it? How can you not get it? So there is changing mindsets. I think people become more familiar with these things, as I say. I think the message is making sure people understand exactly what it is and what it's not. And
yeah,
what it's not is access to your account, the ability to move money around. What it is consent from the client to give you a screenshot and to provide you information that they otherwise have to provide in any case.
yeah,
Again, that example of my own father, we have it all the time with clients where they still want to provide physical documents, but that means going to a bank. It means requesting statements or finding somewhere to print them off. So it's definitely what it's about is what it's not, as opposed to what people think it might be.
yeah. And
That
as you
makes
said,
sense.
it can be time saving for them as well because they don't have
Absolutely.
to get hold of a
Yeah.
physical copy. It
Exactly.
takes a couple of minutes, to link your bank account. And it is just that. It is a digital version of the bank statement they would be giving you
Yeah.
anyway. It's not even a live feed. When they
No.
grant you access, the
Yeah,
statement ends there. You don't continue to see every payment they make into
it's
the future. So I think it's just that general
yeah.
misunderstanding
Yeah,
of how
as I
we.
say, our templates are set so we never tell the client what risk rating we believe them to be. That would be folly of us, but we tell them how much information we want. So if it's 3 months, they know up front that it's going to be the previous 3 month statements that we're going to get access to. So, it's also, it's not giving you anything more than that, and it's telling them that up front. Which I
Yeah,
think is a real positive. The fact that we at the moment don't have a generic open banking message on our Amicus templates. We try and part of the reason for that is we're trying to make the fee earners, they're the client owners, the relationship owners. So we ask them to use the information that we've taken from our open banking guides and put in our procedures to sort of inform their clients up front. In the same way that they previously would say, in the times of physical documentation, you would tell your client, we need your ID, we need X amount of statements, we need this and that.
yeah,
We're putting it on the fee earners to say, we're going to send you an amicus and this is what it entails. It will request your ID and V. It will request a certain amount of bank statements from the open banking app or for you to upload them. So we put that onus on there. But there is absolutely an option within Amicus to add a clear message related specifically to the open banking. So that's something we may do in future. But again, for those maybe wondering about how to best get that message across to your clients, there is that option within Amicus as well. You can have a separate message specifically relating to the open banking request, which is really positive as well.
yeah, definitely. So for everyone that doesn't know, what Bob is referring to is we recently sent out a few guides. Hopefully everybody received them, but if you didn't, that's fine. Just let us know. But we essentially sent out two different FAQ documents, one for you and for your fee earners. So when you're getting questions from your clients, those questions are probably going to appear in this document, and it's just a perfectly crafted answer for how you can respond to them. The second document is actually customer facing. So it's a bit more layman's terms, if you like, and you could give that to your client if you have one that has lots of questions. And they can read through this document, they can read through and learn about how our open banking check works, but also a little bit about open banking itself, how safe it is, how secure it is, and so on. So if anyone hasn't received that, then I'll provide some contact details at the end of the webinar and just let us know and we can send one out for you. Any final thoughts before we move on, Bob?
No, not for me at the moment, Kat. I'm happy to move on.
Okay, fab. So we will be taking some questions from the audience very shortly. But just before we do that, I thought I would preempt a couple by talking through some of the most common questions that we get, and actually some of the questions that were also answered in that FAQ document that we sent out. So the first one, how safe is open banking? I mean, it's a fair question. It often comes up. Open banking provides more security than other routes of sharing financial information, such as paper statements or emails. TrueLayer, who are our data supplier for our open banking check, they're authorized by the FCA, and therefore they have to comply with data protection laws to provide these services, the same rigorous data security standards of banks or any other financial institution. And to recap, the Amicus Open Banking Check operates on a read-only basis. Your client's sensitive information is encrypted and it's protected, ensuring that only authorized parties, the one that they authorized, can access it. Can a third-party provider access data from my client's account without them authorizing it? Categorically, no. Nobody can do anything that your client doesn't specifically permit them to do. The Amicus banking info check simply collects balance and transaction data and does not have the ability to transfer money or make any payments. And lastly, what are the risks? There's risks with anything, right? We all know the risks with emails, for example. Over 22,000 people reported their emails or social media being hacked in 2023. The main risks involved with open banking specifically would be your clients giving access to unauthorized providers, which can happen. To prevent this, clients or anyone can confirm that their open banking provider and their bank are authorized on the FCA register. However, of course, when you're completing these checks through Amicus, you can be sure that our provider TrueLayer is fully authorized but if you want to check that, go ahead. From your perspective, we use this method because the data can't be forged. There is no reliable way to verify the validity of a paper-based statement. Fake bank statements, they can be made, and they're also difficult to spot, which ups the fraud risk in manual checks. How do you know that that statement that you're looking at is real? Open banking provides you with the confidence that the information that you are receiving is up to date. As Bob mentioned, they're not sending you statements from, 6, 12 months ago, and they're also genuine. They can't be defrauded. So you've probably heard enough of me talking today, so we will be taking some questions. I can see that there is a couple in the chat already. Bob, can you see these too?
Yeah, I can. Yeah, I thought I tried to type back to one, but I think of it. So there's anonymous attendee. So it says, out of interest, do you build your banking information check into your onboarding template when you're sending out your initial Amiqus request, or do you send it as a separate request? So in answer to that one, you can do both. Currently, we have the banking request built into our onboarding template. So as I mentioned, we set it out at the very start. So if we're IDing and viewing, if we gather in from the fee earners in our teams the information based on the matter or the client that we need to help us assess a very starting point of risk, and then we use that to determine which Amiqus we send out. So as part of what I said earlier, the benefit of the open banking is it allows you to gather in information all at the one time. So not only do we get their ID and V, we get their banking information, which may relate to source of funds, source of wealth, and if there is anything else we might want to ask for, we can do that all at one time. Following on from that, though, the second question down sort of has a bit of a follow on, and it says, if you get information at the outset, do you then get updated information prior to the date of entry, which may be a couple of months later? So that sounds like a very specific matter type in terms of residential conveyance. And again, we can absolutely ask for information at the outset. We can ask for, dependent on the value, the type of matter, the type of client, what we know of the client, we might ask for sort of 12 months, as I say. That'll give us right up to date information. If we deem that that is sort of on a risk-based approach at the time of entry, which is maybe a couple of months later, we can potentially leave that knowing that the client has enough funds. I really wouldn't recommend that too often, especially on conveyancing transactions. What we might do is simply send a further request again to get more up-to-date information. But you could still do it the other way, what I was mentioning before. You could separate it out. If you know, for example, that the client, when you're onboarding them, is not going to have a date of entry until a few months prior, you could absolutely amend your template to only request for ID and V information or other specific source of wealth, perhaps, that's not related so much to that definitive amount of funding that you need to have information on, and you could send that out just before the date of entry. So, it's very flexible, the templates. You can create them as a sort of static, but then you can amend them on each individual transaction, each individual matter. You can up the open banking term, you can take it down, you can remove the fact that you want to ask for ID and V or what's the facial check?
Yeah.
I can't think of the word for it. You can take that out. You can have a set template, but you're not set to it every time you send it. You can amend it on each and every time. So it's really useful to look at it on a case by case basis. But yeah, first question, we absolutely build it in to the onboarding. We try and gather as much information as we do up front. And then the second one, we can do it again if we feel like we need more up-to-date information because the date of entry in a potential residential conveyance is dragging on. We can get more up-to-date information, and it's simply just sending out another request. But that can be a straightforward banking request.
Perfect. I can see a question in here from Dan saying, how do we get a copy of the FAQ sheets? I may have already answered this already, but very shortly you'll see an email on the screen in one of the next few slides. If you just want to request it from that after the webinar, then I'd be happy to send those FAQ sheets out to you. There's another one here. Bob, how often do you find your clients have a bank account that doesn't work with open banking?
I don't have exact figures, Kat. It's not something, to be honest. I think we've been using Amiqus for most of the year now, and I think it's happened a handful of times at best. I think most, and you might be able to confirm this, Kat, I think most major banks now are open banking enabled, and I think we have it very infrequently that the bank is unable to fill the request. What we tend to see when those situations is that it's more the skepticism of the client, rather than the bank not being able to fulfill the open banking request. The client would rather just update their physical statements onto Amicus, or even just provide them to us as a physical statement. So it's not something I see all too often. As I say, I don't know if you have a list of banks that are not open banking enabled or specifically to Amicus. But it's
Most of the banks can now. I think there's a couple of older ones. I know there's one in Scotland called Clydesdale, I think it is, that hasn't
still,
yet
yeah,
moved
Clydesdale
over
Bank.
to open banking. So
Right.
there'll be a few more traditional banks that
Yeah,
haven't yet made that move, but
yeah,
more often than not, it will
yeah.
work with the majority of accounts.
Yeah, I think as well, it's probably a lot of the challenger banks these days that sort of don't have that physical presence. Your Monzos, your
Mm.
Sterlings, those they're very much set up for open banking. And what I do tend to find, just not even in the workspace, but in my personal life, is a lot of people are moving to those banks for better interest rates, better benefits, and accounts and things like that. And they're very much set up for open banking. So it is sort of the way things are going. Interesting to hear Clydesdale Bank. I'm familiar with that. Interesting to hear that they're not set up for open banking, because again, the flip side of those challenger banks and really being set up for it, I think a lot of the sort of mainstream banks, your Lloyds, your HSBCs, they're sort of they're leading the way for the old style, mainstream banks, and certainly set up for it. So it's not something we come across often. The clients don't have an account that works with it, but there are, as we said, there are ways around that.
Brilliant, thank you. There's a question here from Natasha. Does it work with corporate accounts? Yes, it does. As long as the person that you're sending the request to has access to the corporate bank accounts, then they would be able to provide access. Or alternatively, as you know, they'd be able to provide a bank statement instead. So it would probably be worth double checking that the person that you're sending it to has access to those accounts. But as long as they do, it would work in the same way that it would with a personal account. Um, Can you ask for access for more than one account? For example, savings and current accounts? Yes. So as Bob alluded to earlier, there is a message that you can add alongside the banking info check. I would recommend adding a message if your fee earners aren't being specifically clear with your clients on exactly what you need. So if you want to see all accounts where the funds have been held over the last 12 months or whatever that might be, then you can add a message in to tell them specifically that that's what you want them to do. And they can add as many accounts as they want to. It doesn't cost any more credits or anything like that. It's just the one check. But I would be specific because it saves time on the client just linking their main account and forgetting, about all the others. So yes, they can link as many as they want to. Anything else in there that's jumping at you, Bob?
I'm just, mine keeps jumping up and down. I'm just trying to see. So, and Susie says, I know you can search the client statements for large transfers, but say over the last 3 months, it wouldn't catch multiple credits of, say, 1,000 if you're searching for transfers of 5,000 above, and if there are several of those 1,000 in the last month to get more info. Statements and fluid. So when you're doing the credit searching, if you like, Susie, when you are looking for statements, you're in control of what you're looking for. So you can make as many sort of amendments to, I want to see any credit over £1,000, I want to see any credit over £5,000. It'll bring them all up. As Kat said earlier, you can change it to, I want to see sort of credits in terms of bank gyro credits or cash payments and things like that. So you can really interrogate the statements in the same way that you would with a paper copy. It's just that it gives you that more succinct view when you do it. You can quickly add up how many bank gyro credits there are, for example, or how many credits there are over a certain amount, where you don't have to do that sort of the old school way. I actually had to do it recently for a client. It was reams of paper statements, and they were in a bit of a mess. So it was actually one of those times where I was thinking, well, I wish I had a more succinct version of this. And I was sort of going through it with a highlighter, highlighting every time they got a bank gyro credit, highlighting every time they had a payment over a certain amount. So you can amend that as and when you need to when you're looking at a statement. And you don't have to then download and review them fully. But I mean, the option would still be there to do that should you wish.
Perfect, thank you. Um, Alan has asked if a copy of this webinar will be available afterwards. Yes, it will be emailed to everybody after the call, including people who weren't able to attend today. So it'll be sent out in the next few days, and you'll be able to share this with whoever you need to internally. Douglas has asked whether our banking info check currently works with overseas bank accounts. So at the moment, it would only be UK bank accounts. That said, you can still send them the check because, as we mentioned, we have the built-in fallback option. So if it turns out your client has an overseas bank account, you didn't realize you've sent them out the check, they just wouldn't be able to find their bank on the list, and they would just be prompted to upload a digital bank statement instead. So again, they're not going to hit any kind of digital dead end. They'll just be prompted to complete it via another route. We are probably going to have to move on because we're going to run out of time. For everybody that hasn't had their questions answered, we are going to follow up with some further content via email to everybody, just to cover off again all the questions that were answered and any answers that we didn't get round to. So don't worry, we will still be able to help. Additionally, as I mentioned earlier in the call, as a thank you for registering today, we are offering every client on the call an exclusive free trial of our banking info check. Bob, that includes you. Whether you currently use it or not, you will be granted up to 10 free banking info checks per business to run between now and the 20th of November to hopefully help you see the benefits of running the check through us. If you want to run one on yourself to see how it works, that's also fine. So how it works, you run your check as normal and we'll refund those credits for those specific checks after the period has ended. So you don't need to let us know. We will just do that automatically. And as I said, it doesn't matter whether you currently use us for banking info or whether you don't. This free trial applies to everybody. As I said, we will follow up with some of the questions that we didn't get round to after the webinar. However, if you do have any urgent questions or if you haven't managed to give it a try yet, but you'd like a demo just to see how it works from start to finish, then you can contact us at support@amicus.co and ask to book a demo with me. I'll schedule something with you over the next couple of weeks. I'd be happy to take you through how it works. For any prospects that we have on the call who haven't yet joined Amicus, if you can reach out to your BDM or the salesperson that you're speaking to, then they'll also be happy to take you through a demo of how it works. And whoever doesn't currently have the FAQ sheets that were sent out, again, just reach out to support and we'll be happy to send those out for you. But that's it. Thank you, everybody, for taking the time to join today. Thank you very much, Bob.
Thank you very much for having me.
For taking us through your insights and for answering some questions from the audience as well.
Absolutely. Thank you very much.
Been a pleasure. Have a great day, everybody.